Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. In this video, we will be evaluating the portfolio performance over the past month as well as the first 6 months of this portfolio. The portfolio composition has changed somewhat, so be sure to watch through the end of the video. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Also, I've appreciated your feedback about improving the channel and hope you like the new feel. There is so much awesomeness planned for this year, and I'm pretty stoked to share it with you. Without further ado, let's get started. Cue the logo. Let's start off with the market's performance. For the month of December, the S&P 500 fell 2.7%. Interestingly, we did hit new all-time highs early, but the market has been in a steady downturn after the first week. When we look at the companies that make up the S&P 500, we can see an interesting split in performance, though the month was pretty rough for most companies. Big tech companies like Microsoft and Nvidia fell, while Apple, Amazon, Alphabet, and Meta gained. Over in our corner of the market, non-alcoholic beverage, consumer packaged foods, farm products, alcoholic beverage, confectionery, and restaurant companies all fell. Spoiler alert, it was a tough month for the portfolio. Okay, let's move on to the portfolio performance. I deposited $100 into the account on December 1st, 2024, and at the end of the month, the portfolio balance was $575.60. This means the portfolio lost $44.42 for the month, representing a 7.2% loss for December. Sheesh. Given the S&P 500's negative 2.7% return, we lost 4.5 percentage points of alpha by not being invested in the S&P 500. A couple of things here caught my attention. I only outperformed the S&P 500 for a single month at the start of the portfolio. Since then, I have trailed the S&P 500. Worse still is that when the market is up, my portfolio usually gains, but much less than the market. And when the market falls, my portfolio falls even more. I honestly believe my portfolio composition has improved since I started, but perhaps I have been buying at valuations that were a bit too lofty. Since inception, the portfolio has had a negative 5.3% return on a money-weighted basis, while the return on a time-weighted basis was negative 4.1%. Given the S&P 500's 7.4% return, we lost 12.7% of alpha by not being invested in the S&P 500 since inception. On first glance, one might think this is because I am competing against the massive tech companies in the S&P 500, but if we compare the portfolio's performance against the Invesco Food and Beverage ETF, First Trust Nasdaq Food and Beverage ETF, and Advisor Share Restaurant ETF, the portfolio still loses. But not all is lost. What is clear from the data is that restaurants were the place to be invested, but I'll talk about that more when we go over the portfolio companies in detail. Now let's look at the portfolio moves for the month. First, I bought some more Chipotle on the December 3rd pullback, Celsius on December 5th, Hershey on December 6th, and also received a Wingstop dividend. Texas Roadhouse on December 9th, more Texas Roadhouse and Wingstop on December 10th and 11th, Pepsi and Wingstop on December 12th, Celsius and Wingstop on December 13th, Pepsi on December 16th, and also received a Hershey dividend. Pepsi and Wingstop on December 17th, Celsius, Hershey, Pepsi, and Wingstop on December 18th, more Wingstop on December 19th, and finally received some sweet dividends from Texas Roadhouse. Clearly, I was focused on building my Wingstop position, but might have been a bit too aggressive. Okay, let's take a look at the portfolio positions. Let's look closer at each holding. Celsius remains my largest holding, with 5.14 shares at a cost basis of $33.94. This position is down a whopping 22.4%. Celsius makes up a ridiculous 23.5% of the portfolio. The good news here is that I managed to lower my cost basis while decreasing the weighting of this position. I will continue to add, but only very sparingly. Pepsi is my second largest holding, with 0.66 shares at a cost basis $164.06. This position is down 7.3%. Pepsi makes up 17.5% of the portfolio. As you saw in the portfolio moves for the month, I bought a lot of Pepsi this month. Unfortunately, the share price has continued to fall, and the company has diminishing prospects for earnings growth in the near future. Still, I like the company but would prefer a small weighting less than 10%. Next, we have Wingstop, with 0.35 shares at a cost basis of $304.51. This position is down 6.7%. Wingstop makes up 17.1% of the portfolio. I really love the company but was clearly not patient enough to have waited to add to this position. Still, I am happy that it is finally a top 5 position in my portfolio now. Chipotle is my 4th largest holding, with 1.19 shares at a cost basis of $50.44. This position is up 19.5%. Chipotle makes up 12.4% of the portfolio. I did average up with a small buy in December but am still looking to add to this position. Luckily, I am still in the black with Chipotle, and it is my largest winning position. Next, Texas Roadhouse, with 0.37 shares at a cost basis of $175.34. This position is up just 2.9%. Texas Roadhouse makes up 11.4% of the portfolio. I was pretty aggressive about adding to this position, and am happy to have grown it to over 10% of my portfolio. Still, I would like to see this become a top 3 holding in my portfolio. Next, my only food holding, Hershey, with 0.33 shares at a cost basis of $179.76. This position is down 5.8%. Hershey makes up 9.8% of the portfolio. Hershey continues to be a drag on the portfolio despite having averaged down to improve the cost basis. I was debating dropping this position as it did not provide the portfolio stability I had hoped for. I am curious to see how a better cocoa harvest will affect this company, and will continue to hold for now. Dutch Bros is my 8th largest holding, with 0.34 shares at a cost basis of $29.73. This position is up 76.2%. Dutch Bros makes up 3% of the portfolio. This month it takes the crown as my best performing position. Though the valuation has gotten very lofty, I still like the growth prospects for the company. I have not added to this position in a while, and will probably only do so if the share price falls significantly. Now, we have the sushi restaurant, Kura Sushi, with 0.19 shares at a cost basis of $52.09. This position has fallen a bit and is now up only 73.9%, and is no longer my best performing position. Kura Sushi makes up 3% of the portfolio. I do plan to add if it falls below my cost basis again. Not much else to say here except that I am eagerly looking forward to the earnings report, which should be released very soon after this video comes out. Now we have the penultimate position, Starbucks, with 0.14 shares at a cost basis of $75.11. This position is up 21.5%. Starbucks makes up 2.1% of the portfolio. I feel like I am one of the only people who still like Starbucks, but the share price is still too high for me to buy more right now. I will continue to watch and hold. Last, I am 0% in cash as I spent nearly all of my money this month. Only 25 cents remains. Normally I would be super proud of this, but given the negative performance this month, my pride is a bit muted. As far as the weighted average metrics for the portfolio, gross margin, return on invested capital, cash conversion cycle, and net debt to EBITDA are all better in December when compared to last month. Revenue per share growth and free cash flow per share growth were worse this month. Looking forward, 2025 is trending to be a big year. With so much change coming with the new United States presidential team, there will probably be some market dislocations to take advantage of. If inflation spikes again, farm product companies may see rising share prices. Automation is set to continue to expand with restaurants, such as Sweetgreen and Chipotle, well positioned to benefit. All in all, I am very excited to start 2025 and continuing working to build this portfolio. Many thanks for watching. What do you think about the portfolio? Share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.